It's the Doscinco Project.
Money pouring in, clientele growing down.
With your host, Doscinco.
Let's go!
What up, everybody? You are now tuned into the Doscinco Project, where we talk about business, entertainment, motivation, and mindset. I have another special guest with us in the building today. He is a partner at 76 Capital, a venture capital firm that invests in game-changing tech startups in sports, esports, and sports betting. They were an early investor in Whistle Sports, N3rd Street Gamers, Grub Hub, companies that were acquired by DraftKings, and so many more. Prior to 76 Capital, he worked in the sports and entertainment industry for the Walt Disney Corporation, Philadelphia 76ers, and the Philadelphia Flyers. Everybody, please welcome Chad Stender. How you doing today, sir?
Oh, Darren, it's so good to see you, my friend. I really appreciate you having me on your show, taking the time to meet with me. And that's always good to see you.
Yeah, man. Listen, you and I, we've been following each other for quite some time.
Definitely.
And, I remember you from director of operations to now you're a partner of the firm, this venture capital firm. So it's always great to see people, just grow within their profession. But what I want to do is, especially for the audience, what is venture capital?
I think over the last, 10 to 15 years, it's really changed and evolved. And when I came out of school in 2003, James Madison University down in Virginia, the idea of entrepreneurship, innovation, investing, it was much different than it is today. And really the big jump off was Shark Tank. And I think most of the audience, most of the people in this country, but around the world, think of Mark Cuban, Damien, right? And what it's done for this business and this ecosystem. And so at the end of the day, venture capital is taking capital. Usually it's the company's ours. And then we go out and raise capital from high net worth individuals, institutions, families, multifamilies. And then it's our job to run our thesis and our strategy. And all that means, that's a fancy way of saying we have our playbook of the companies we're going to identify, invest in, and then help. And then when they're successful, it's good for everyone. It is high risk, high reward. Nothing is guaranteed. And so everyone needs to understand from the jump what you're going into, what the strategy is, and what might happen, but also what could happen. We're coming off of the pandemic. Right now, we're either in a recession, off a recession. God, no one's exactly sure. No one's identified it here, right? August 4th, 2022. But you never know. And that's why you want to have a portfolio of companies. You want to be able to help your companies in every which way, hiring, running their strategy, business development, raising additional capital. It is a lot of fun, but every day is a roller coaster, my friend. And you never want to get too high, too low. You want to try to maintain. But I kind of quit. It's the closest thing to playing sports. When we were growing up, it's that competition, the intensity, and it's a lot of fun.
Are you looking for companies that, like, say, for instance, there's a startup that started last week? Or are you looking for individuals that have been going, they've been operating for the past couple years, they actually have tax, they actually have tax returns and things of that sort. Like, what are you looking for? Sure.
And I think taking a step back, there's all different versions of venture capital or private equity, from the really early stage, right? Where a company literally is day one, maybe a business plan, maybe they've raised a little bit of capital, all the way to this end where the company is mature. They might be thinking about going public, or they're getting acquired, hopefully for hundreds of millions to billions of dollars. We at 76 Capital are right here. We love the early stage, the founders. And when you step back, we really think of ourselves at 76 Capital as entrepreneurs, as builders. I spent my career in sports and entertainment, as we discussed, but also as an entrepreneur in the innovation system before moving over and spending the last 10 years as an investor. And so when we really think about describing 76 Capital, we're entrepreneurs, we're builders, and we love working with the companies we invest in. That's a big part for us. But at the end of the day, we look for three things, right? The companies have to be going into a massive go big opportunity. Because it's so early, their strategy is going to change, their business plan is going to evolve. And if they go after a very finite opportunity and they miss, there's not much to move into. But when you go after a massive opportunity, you're going to ebb and flow.
Yep.
And you might not get it exactly right, but you'll be able to move to another opportunity. And the good entrepreneurs are skilled at that.
Gotcha.
So it's a go big opportunity. Everything we do, we underwrite for at least 10 times our capital return. Because we're not, most early stage investors. Go ahead.
Explain that. Explain exactly.
Yep.
So when you say you underwrite 10 times what they, what's returned, explain that.
Sure. So when we put $1 into a company, we put more, but every dollar, we expect to get back 10 times of our dollar, right?
Gotcha.
Dollar in, 10 back.
Right.
Now, the reason for that, we're going to miss. Unfortunately, given that we go in early, no matter what you do, you're going to get some wrong.
Right.
And it's like baseball. The best venture capitalists, if they hit over 300, they're in the Hall of Fame. So that means, right, at least half your investments aren't going to go the way you thought.
Gotcha.
That doesn't mean they're all going to go to zero.
Right.
But they might return 50 cents on our dollar, $2 on our dollar. And when you get over the 10 times, that takes care of all those ones that didn't go exactly how you thought they would from the start, right?
Yep.
So that's kind of the strategy here. When you go in early, we look for everything at least 10 times on our capital.
Okay.
So go big opportunity. Second, but probably the most important, we evaluate the people.
Okay.
We always want to evaluate and invest in people that are smart and nice and are truly determined, understand what they're doing better than anyone out there.
Yep.
And at the end of the day, we even though we're investing in sports, but we look to invest in athletes.
Gotcha.
People that are tenacious, that will run through walls, that treat people the way they should be treated, and just have it in them to be successful. And so you don't have to be an athlete, but it's like that mentality of you put in the work, you're willing to go the extra mile.
Yep.
And you set goals and you achieve them and you keep moving. And that's been really successful for us, right? So go big, you invest in the people.
Yep.
And then the third thing for us, which is critical, we will not invest unless we can add a lot of value. Unless it's back to that idea of like being a builder ourselves.
Right.
A lot of people in the industry, a lot of venture capitalists write checks, hand it and say, you know what? Call me in 6 months. Call me in a year. Let me know. Send me those reports. And everyone's out there touting, like, we had a lot of value. We're really strategic.
Right.
I think what we say is call any of our CEOs, call any of our founders that we've invested in.
Yep.
And ask them what they think about us. Ask them what value do we really, because we really pride ourselves. That's really where we cut our teeth.
So you put a lot of customer service behind it as well.
We'll help with that. We roll up our sleeves. We say, our Rolodex is your Rolodex. Go through my phone. Wow. Who do you want me to call? You want me to call Daryl? You want me to call, right? And because when our companies do well, we all do well. So we're all on the same side. Once that money moves over, we move over too. And we got to be all in this together.
So that's the investment side, right? I would probably say especially me being a fundraiser as well, some of the hardest, parts is actually raising the capital, right?
Sure.
Now, once you've built a reputation like 76 Capital has done, I'm not going to say it's easier, but it's a lot better for you to get in through the gatekeepers and meet those high net worth people, right?
Yep.
What's the process of raising money for a venture capital? And also, how do you set the goal of how much money you want to raise for a specific fund?
So let's go backwards into that, right?
Okay.
How do we set the goal? So from the start, we have our strategy.
Yep.
And we'll say in this current one we're at, that we started last year, we want to invest in about 20 companies.
Okay.
And so we model it out. If we invest in 20 companies and we continue to follow on the companies that are doing well, and we might put in 5 to 8 million across, but we want a total of 100 million based on how we operate and the initial investment and then the ones that are successful.
Okay.
Because like anything else, you want to double and triple down on the ones that are doing the best.
Absolutely.
Not, that part's simple, right?
Yeah, right.
The fundraising piece, and this is the part that I was an entrepreneur and now I'm an investor, but at the end of the day, we're all raising capital.
Yep.
We're all asking for capital. We're all asking for the business. Doesn't matter what we're doing.
Right.
We're all out there selling something. And it's like anything else. The better you're known, the more successful you are, the easier it gets. But I don't think it ever is easy.
Right.
Because you're always out there asking. And over the years, you learn and you improve. And hopefully you've had that success. Or honestly, you're not going to be able this whole game of venture and private equity
Yep.
is predicated on success.
Gotcha.
And what you see in the industry is it's actually easier to raise a first-time fund because you go to your network, you're telling people you have a track record of what you've done, and people want to go in.
Yep.
But if that first fund's not successful, you will not have a second or third or fourth.
Gotcha.
And right now, we're just finishing our fourth fund. And when you look out,
since the inception of 76
since
Capital?
Wayne started it in 1999, right? So Wayne Kimmel, who you know really well too, started as a 29-year-old and went out and raised that first fund, right? And when you look at percentage-wise, it's less than 15% of early stage venture that will go on to have more than 3 funds.
Wow.
So we're one of few, right. So, but at the end of the day, it's never easier. Certain things get easier.
Yep.
But you got to hustle.
Yeah.
Right? Like at the end of the day, what's it come down to? Hustle.
Yep.
Doing the right thing, becoming successful, rinse and repeat.
Right.
Like that part, it's just.
How do you get in through the door? Like say for instance, you have someone that says, "Hey, I want to be a venture capitalist," right? But I have no funds, I have no Rolodex, nothing. I'm starting off from scratch like Wayne Kimmel, right?
Yep.
How do you get in through the doors to actually start to meet these high net worth people? Like say for instance, you have someone you've never connected with before and you want to raise some money through them for your fund. How do you do that?
Sure. I think in venture and private equity, you see 3 things.
Okay.
Right? Most venture capitalists and private equity founders come from capital. Okay. It just is what it is. It makes sense. When you look at the majority, they were born wealthy.
Right.
And anyone that out there that is an investor that doesn't admit that,
right,
they're full of it. So you're either born wealthy, which some are, some aren't, is what it is. Number 2, you were a founder. You were a successful entrepreneur that made their wealth from starting a company, from starting something, and that's how you got wealthy. And you can do both. You can be born wealthy and be I'm not saying this, that, the other.
Right.
And then there's the third, which is more of like an anomaly, which is your Wayne Kimmel.
Okay.
Which is probably less than 1% are actually successfully not full-fledged coming from capital.
Yep.
Like, trust me, Wayne was born well and his family has done well.
Yep.
However, he's not the Kimmel that for those of you that are on the
Kimmel
right,
that's
else, actually not his family, and I think that gets confused.
Okay.
His dad started a very successful law firm in Delaware that his brother runs. And Wayne talks about, not to plug a book,
of course,
but Wayne talks about in his book about like how he started, how he got going into 29-year-old. But at the end of the day,
awesome book, by the way. Awesome book, because that was how I connected with you guys in the very beginning. I remember you and we had coffee after that. But that book basically talks about the inception of 76 Capital and how he was able to go from zero to where you guys are at now.
No doubt, right?
Which is awesome.
So at the end of the day, it's all about relationships. How do you build them? And it's not just about having a ton of relationships. It's about having a ton of deep and incredible connections. And that's where the value comes from.
Okay.
But it takes time. It takes a ton of hard work.
Right.
And it really is putting yourself out there. It's really going where others won't.
Yep.
Or others start to shy away from.
Okay.
And that's networking. That's being in the place where the capital goes. I know that sounds like simplistic.
Right.
But going to the restaurants where the money is, going to the events where the money is, figuring out who the money people are and how to get to them. It's a whole strategy. Like when people look at people that are like really good at networking, really good at connecting, there's a sport to it.
Right.
And Wayne is your, prime top A+ athlete. No one relishes networking more than Wayne. No one's better at networking than Wayne. And especially in the Philly region, you talk about you're like, oh, Wayne Kimmel. Everyone's like, yeah. So like for me, trying to build my own network over the years,
right.
I was like, oh, I know Wayne. And I'm like, no, but it takes that tenacity and that willingness to show up at an event, not knowing if you're going to meet someone. And it's hard to walk into a room by yourself. It's hard to go meet people.
Right.
But it's really an art. And people always, I think the one thing, Daryl, people will say when I'm talking, fortunately, to students and entrepreneurs, I'll hear, I'm not a good networker. And I hate that.
Right. Because you're already counting yourself out.
You're already putting yourself behind.
Right.
And look, it is really hard. I get it. People aren't as outgoing, but networking, it's an art and a skill, and it takes repetition. It's like gaining muscle or losing weight.
Okay.
You got to do it day in, day out.
Yep.
You can't, go for a run and expect the next day you're going to run a marathon.
Wow.
And networking is not different.
Right.
You need to go to 20 events.
Yep.
And that first event won't be as good as your 20th, but you'll figure something out, right? And my only quick tip, you better have a business card. Wayne always talks about it, and we've all gone digital, and we're all touching phones, this and that.
Yep.
That is one thing that I don't think should ever go out of style, is that physical thing, because there's so much that comes from that exchange of a business card.
Right.
Because you tap phones, that it digitally, how do you at the end of the night, you tap phones 20 times? You didn't go back, remember that was Daryl or Susie or
people, right?
It just goes to a digital abyss. But that physical card that you can write on and take notes, that's powerful.
Sense. So quick tips on networking, right? So obviously, you spoke about knowing where the wealth goes, right? Where these high net worth people go, the restaurants, the hotels, they go wherever they reside, right?
Yep.
Now, you don't know any of them. How do you get in front of them? How do you start to nurture the relationship to the point where now you can make an ask?
You got to go to the industry, right? And it doesn't matter if you're trying to focus on sports betting, healthcare, unicorns. I don't care. There's almost a convention, a group, digitally, physically, for everything. Okay. You got to go to where that is, right? And then once you're there, then it's what do you do? Okay. And I think for each of us, it can be different. You don't have to be the person that walks in a room and tries to meet the whole room.
Right.
But at the same time, the person that walks into the room and goes to the buffet or to the bar, that's where that's the differentiation. You don't have to meet everyone, but you're there to network. And I think part of it is have a goal, right? If you're going to actually take time out of your day, away from your family, away from your friends, whatever you're doing, what's your goal of walking into that event? And I don't think it should just be just to network. Right? How many people do you want to meet? Who do you want to meet? See if you can get the attendance list ahead of time. The best thing is that table up front. Right. Because they're the people that put the event together. They're the people that saw the last 100 people in front of you walk in.
And they underwrote the entire event most
likely. Ask them,
them,
who's in this room if you don't know? Who should I talk to? Have them help you. Oh, I would love that introduction. The better their event is, the better for everyone.
Right, absolutely.
People want to help people.
Yep.
And the hardest thing is just getting past that initial, I need to go meet someone, that timid, I'm scared. It's daunting.
Right.
But bring a friend. Bring your girlfriend, boyfriend, wife, spouse. No one wrote the rules on networking.
Right, exactly.
Right?
No, it makes sense.
What you can do is just go in and make it happen for yourself. Right. But that to me is there's some tips and trades, but I always say you got to get comfortable with being uncomfortable.
Now,
and that's critical.
No,
right?
I love that. Now, one thing that I love, right, is the fact that you not only network with people, but you also nurture the relationships and you keep the relationships, right? Case in point, right? You and we met off of an inquiry for Wayne Kimmel's book on LinkedIn. I connected with Wayne. Yep. Wayne said, I want you to talk to Chad. Then next thing you know, you and I were connected, and we've been connected ever since, right? On top of that, what I found out was, okay, I want to add more value to what you guys were doing at the time. And I know at the time you guys were pushing the book. So I said, why don't you come to the college, meet with the staff? We can actually have you speak to the students and we'll have a bunch of books and we'll sell them that way. So it was kind of like me adding value, but you and I connected, until this day. And let me tell you guys how it goes full circle, because Chad knows that I'm doing a podcast now. So now he says, hey, my portfolio of companies, if you want to connect with any of the CEOs or whoever in that company, you're more than welcome to interview them. This is the full circle of networking and how we can add value to each other, which I love.
No doubt. I mean, at the end of the day, it's life. You don't know if a business relationship is also going to become a personal. You and I will go out and have a drink, have a call. It doesn't matter. because we're cool.
Exactly.
But it started, hey, LinkedIn, who is this person, right? And that's how a lot of this is starting. More starting digitally than in person today.
Yeah,
is what it is.
Yep.
But a couple of things. You need to do both.
Yeah.
You need to live online, and you also need to live in person. You can't become fully successful just digitally. And at the end of the day, you can't ignore social media.
No, right.
They're tools. They really help you. LinkedIn, Instagram, like we were talking about TikTok. Like it's tough. It takes a lot of effort, but there's a lot of strategy to it.
Right.
And what we always talk about is, you can have a mile wide of relationships, but if they're in, surface, right? Like you don't really know that allotment of people. So you want to go a mile wide and a mile deep. And that part's hard. That part of really building a relationship and maintaining it.
Yep.
A lot of people have boxes of business cards.
Right.
But you don't know 90% of what's in there.
You haven't contacted, you haven't nurtured the relationship, you don't know anything about them, not even about their kids, anything.
Right.
Like anything at all.
So it's an art form. I was talking to a guy I met through our kids. They play sports together. Great guy. Awesome. And we were catching up 5 minutes today about he's helping me on something.
Okay.
And we were talking, he said, my birthday's December 26th. What do? Jot it down.
Yeah.
Add it to my calendar. Right? I'm not gonna get him a gift. I'm not gonna send him a package, but I am gonna ping him on December 26th, and he'll be shocked that I remain, right? And it's those little soft skills that turn into big things for you. And who knows, but you do that day in, day out.
Yep.
And that's where stuff magically happens.
Wow. So all of the networking, raising the money for the fund, now you go out to invest. You hit a few home runs, but you made a lot of, strikeouts or misses or what have you in between. What are some of the wildly successful companies that you guys have invested in that maybe the world knows about?
Sure. I think, I'll hit a couple. So Wayne started this, I was in high school. so Wayne started a company that became Grub Hub, right? So he was Seamless Web, which anyone that's in New York, you still see stickers on the wall.
I do.
Right?
I still see that logo. Yeah.
So Seamless was really the B2B supplier, and Grub Hub was the B2C.
Okay.
And no one knows this part of the story, Daryl, but Seamless acquired Grub Hub. But because Grub Hub was consumer facing, they took the name strategically and went public, and their public is Grub Hub. But Wayne and 76 Capital were the only institutional investors, only venture capitalists in Seamless Web.
Yep.
And they didn't need another dollar.
Wow.
They went out and were acquired actually by Aramark, Philly company.
Yep.
And then wildly successful that one investment returned the entire fund.
Wow.
And then when I got going to 76 Capital in 2012, we made an investment in Whistle Sports.
Yep.
And it was really the dawn of everyone putting videos online.
Right.
And Whistle Sports actually reached out to Dude Perfect, which is crazy because now everyone knows Dude Perfect. They just got a deal done with Amazon where they're going to be calling an alternative broadcast.
Yep.
I mean, the dudes, everyone, my son, daughter, love them.
Everybody knows them, right?
But in 2013, they were just getting going. And it's kind of like a little bit of luck, but also knowing who to work with. So Dude Perfect was just one of their many creators.
Okay.
Across their network. And then that company, Whistle Sports, was just acquired by 11 Sports out of the UK last year.
Were they a direct competitor of ESPN, or were they?
So it's funny you say ESPN. So when they started and when we invested, we knew the founders. Again, you invest in the people.
Yep.
And at the time, they wanted to become the ESPN for kids.
Okay.
And there's a lot of people, well, that's stupid. You can't compete with ESPN. Or people said, yeah, but ESPN is for kids.
Right.
But it was the time where a lot of athletes were getting in trouble, and it was on main stage media. And part of ESPN almost became TMZ.
Okay.
Right.
Gotcha.
And all the commercials, it was alcohol. It was stuff that, if you're you have a 12-year-old, a 14-year-old, you're probably not. And so they went with that angle of we want to be the ESPN for the kids. We want to lead with the kids, and the adults can have their content. And that was really their strategy.
And their videos are like kind of, you have a golf ball, you hit it into the basketball court right? Or
it's everything, right? It's people doing crazy stuff on a pogo stick to the Dude Perfect to soccer shots and skills, and it was just entertaining. And then they brought in brands. Okay. And what became like what commonly today is called a multi-channel network. Right. But at the end of the day, it's like a conglomerate, sports, but like family friendly.
Yeah, I love it, man.
And so that was a big hit. And then the one I personally want to touch on, we knew sports betting was always, and whether you're for it or against it, it was always a big part of sports. Yep. It was illegal outside Nevada until 2018, right? So 4 years ago. And then this law called PASPA was overturned. New Jersey was actually the one that really led the charge. And at that moment, when the law was overturned, it said, hey, if you're a state, you can do whatever you want. You can keep sports betting illegal. You can allow it in person. You can allow it online, mobile, or you can do both. It's up to you. Okay. And New Jersey went, and then PA went, and New York just went more recently, and now it's over 35 states. Just the other day, Massachusetts is just waiting for the governor to sign, which will be the 36. Okay. And so it happened very quickly, and we saw a big opportunity. And what we saw was that Nevada had no real reason to innovate because they had the market on lockdown. Right. It was like a $5 billion industry in Nevada, mostly Vegas, but Nevada. And that was it. And then all of a sudden, sports betting rolls out across the U.S. And we were like, man, there's so much opportunity to innovate, to disrupt, to use technology. Yep. And so we invested in this company at the time called Line Library, but it became Victory. And they became an innovative tech platform. And I kind of led the investment. I was on the board of it. And in 13 months, we were acquired for 10 times, ironically. That's crazy. What we initially invested at.
Can you give the public numbers, or those not?
No, I can say that. Okay. Right. Okay. So the value that we went in at in 13 months later, which it rarely happens this quickly. Usually it's 5 years, 6 years, 7 years. Right. But in 13 months, it went off for 10 times what we invested. Wow. It was a huge success. And I really attribute that to backing Sam Ratner, the founder, who I've become good buddies with. But to that point, like business, friendship, like there's not like fine lines. Like to me, it's just people. Exactly. Right. But we invested in a rock star entrepreneur, and it was a crazy journey, especially because it was during the pandemic. Yep. But it was pretty successful. That's the one right there. Victory acquired by Fubo TV. Awesome, so man. Yeah, that is awesome. Now, who can you name some of the people that invest in 76 Capital? Sure. We're fortunate because we started focusing on sports. Yep. We've had team owners. Okay. Right. So Arthur Blank, owner of the Falcons, Atlanta United. Michael Rubin's been one of our investors across Sixers, and even though Fanatics, right? Like his private company is worth more than I think he would be a Fortune like 200, 250 company. Yep. I think they're going to go public, but if they were public, they'd be a Fortune 500 company. Wow. It's crazy what he's done over the years. So Michael Rubin, Bob Nutting, who owns the Pittsburgh Pirates, great investor, great friend of ours. He had our whole investor base and our team and our founders out to Pittsburgh a couple weeks ago. And we did investor presentations. And of course, he took us to a game and had us in his suite. And it's that kind of stuff where like, awesome. I just think back and I'm blessed. I love what I do. Yep. It's a lot of fun. I work really hard, but I'm at a Pittsburgh Pirates game with the owner of the team in his suite. And if you would have told me, 10 years when I got going, no way, man. Let's talk. Go ahead. Yeah.
Let's talk about that, right? Because obviously you helped lead the charge to that wonderful investment that we see, with Victory, right? Then you've been a part of the whole venture capital, world for the past 10 years. What did you do prior to that? I know it was like Walt Disney Corporation, 76ers, the Flyers. What was your childhood like? Where did you grow up? Did you think venture capital would be, your area of expertise? Talk a little bit about that.
Yeah, happy to. I'll run through, but I grew up in Lancaster, PA, Central PA kid. And what I always attribute, and what's awesome about Lancaster, we're known for the Amish and the farm work, right? Like that's what you think of Lancaster, and it's true. Yep. And I loved where I grew up. But the thing I think of Lancaster and literally is hard work. Mm-hmm. Like that is what you see around you. People, I'm not plowing the fields, right? Growing the corn and tobacco. Like I myself had buddies that owned farms, and I would go over and work the farm. Now, I didn't do it day in, day out, but like you learned a work ethic that I attribute to my parents first and foremost, but also my environment.
Gotcha.
And we weren't always the best at sports or school, but you realized that at an early age, if you worked harder than others, your sports team would be better than others. If you put in more hours in the classroom, you would be able to get the grades that were probably maybe not the best in the class, but you would do more than exceed your internal. So I was blessed with how I grew up. My folks, my brother and sister. I went down to school in Virginia, James Madison University, I mentioned, and studied business, kind of, down the road, middle, great school, great education. And I was fortunate. I got an opportunity with Disney. And it was kind of a quasi internship, first job. And I did. I graduated. I immediately went down to Orlando. And I'm working for the mouse. Like my big joke is like all my buddies are working for the man and I was working for the mouse, right? But
that mouse was powerful.
That mouse was good, yeah. And the first thing you had to do was you had to work at a park. And when I was interviewing, a little arrogance was, I'm coming out of college. I'm going to have a business degree. I want to be in the business division of Disney. And they said, Chad, that's great. Come down, prove yourself, and that's where you can go. But the first thing you're going to do is sell, chicken links.
Wow.
And I think a big lesson in my life is just swallow your pride, work hard, good things will happen.
Right.
I went down to Disney. I had the best experience. Again, amazing people, awesome network. I was successful. I made it over to like the business area.
Okay.
And the whole time down there, the wide world of sports, and I'm not sure the audience have been down there. It's an amazing complex, and it's grown and grown and grown. But I would just find myself literally going over on my downtime, on my off hours to the complex. I'd watch a game. I would it was obvious who worked there because they had, and I would say, hey, what do you do? And I just talked to everyone.
Wow.
And that is what I wanted to do. I wanted to work at the wide world of sports, and I kept getting advice like you should go back to school. You should get your degree in sport management. And I did. One of my relationships set me up with a school back up here in the Northeast.
Okay.
Set me up with a professor. I got a grad assistantship. Everything was paid for. Wow. It was great. It was all because of my network.
Okay.
And so I did. I went back to grad school. And then I decided that I wanted to stay up in the Northeast and not go back down to Florida.
Yep.
And I got an opportunity with the Sixers.
Man.
And that was my dream. I mean, I grew up huge Charles Barkley fan, then Iverson. Love the Sixers. And 2005, I got it. I interned with the Sixers. It was awesome. It was a dream.
Wow.
And at the same time, Comcast Spectacor owned both the Sixers and the Flyers, right? Ed Snyder started the Flyers and then partnered with Comcast, and then they acquired the Sixers. And that year in 2005, the NHL's on strike. Wow. So all the employees for the Flyers, fortunately, were able to move over to the Sixers. Yep. But what that meant was they weren't hiring. There was a hiring freeze because so I'm there doing my best interning, meeting everyone, doing everything I should have. And I kept saying, I want to work here. I want to be part of this.
Of course.
And everyone said, you're awesome. Keep going, kid. But we're not hiring as timing goes, you got to have luck.
Yep.
And you got to be at the right place. The NHL came off a strike that August.
Yep.
And the Flyers go back across and start doing what they do. And they needed to hire up. Right time, right place. And they hired me. And so I went from the Sixers to the Flyers and Comcast Spectacor. And I was fortunate. I got to do a couple different things. And every way, I proved myself. And I got to do a lot from all the teams to the concerts to the shows. Everything that comes through the Wells Fargo Center. Right. I was ultimately able to work across. And it was amazing.
And you weren't afraid to work through everything from the lowest to the highest, with regards to making strategic decisions or what have you. You didn't shy away from it.
You can't be.
That. Right.
You can't be. I think what we look for at 76 Capital is literally the person that's willing to take the trash out. No joke.
Yeah.
Take the trash out and go close a massive deal. And the person that is scared to close a big deal or thinks taking the trash out is beneath them isn't the right person for us. Right. And I think, I probably learned that early on. You just can't think anything's beneath you.
Right.
if you can, I think that you're going to hold yourself back, right?
Yeah.
So anyway, fast forward, sports. I always had this passion for innovation. But again, before Shark Tank, it wasn't as defined.
Right.
And I went out and I tried to buy companies, start companies, try a couple of different things. I spent about 5 years. Ultimately, I got in with a startup. I was brought in by the founder. And as ironic as it can get, it was in the sports space. And I just never really left that thread.
That's nuts.
And then in 2012, one of my best contacts, still one of my best friends from the Philadelphia Flyers, said, look, I'm at 76 Capital. I think there's an opportunity for about a year.
Okay.
And I want you to come in, hustle, and either there's going to be more to do at 76 Capital, or we have all of our portfolio companies, and this probably is something you should consider.
Okay.
And it was the right time and right place. And as you said, 10 years later, and a lot's happened, but that's kind of the backstory.
Wow. And did you enter 76 Capital as director of operations when I met you, or you were, something else before that?
I think, we've been a small team.
Yeah, yeah.
And I was really brought in to whoever needed help, get it done.
Right.
Right. Like make it happen.
Okay.
And so I ended up moving across finance, audit, working with our investors, helping our companies, not so much on the actual making the investment decisions, but I did get to do a plethora of things at 76 Capital. And so most of it was on the operations side. And then I got more and more comfortable and more trust. It's all about trust.
Right. With
the investments themselves and the capital piece of it. And, as you go, and Wayne and I started doing more together. Yep. And then it was 2015, we had that jump off. We brought in our third partner, and 2016, I can explain it, but we saw this opportunity globally across sports.
Yep.
As we defined it then as an asset class that still today, people are like, wow, I had no idea how valuable sports are.
Esports?
So it was esports.
Yep.
It was a value of traditional sports,
okay.
And then there's crossover and gaming and sports betting, and it's global, right?
That's nuts.
I mean, you're talking about the NFL now playing a game in Germany this year.
Yep.
The NBA started NBA Africa. It's incredible, and now because of technology, you can watch things on delay in real time, AR, VR, augmented reality, virtual reality. This whole world is wild, and we're in some of the craziest companies and using some of the best technology, and it's becoming disrupted.
Yep.
And there's a lot of financial opportunity, but again, it's a lot of fun for all of us.
It's amazing, man. So some of the keys to success, throughout your entire career, I mean, obviously, hard work. Hard work is very key. I would probably say networking and continue to refine those skills. What other things do you feel as though were, attributing to your overall success?
Yeah, we get asked this question a lot because we talk at the different business schools. Mm-hmm. We're fortunate we get to spend time with the entrepreneurs. They tend to be young, but in and out of colleges. We get asked, two big questions. How do you become a venture capitalist? Like, how do you get into this industry? Unfortunately, there are very few jobs and opportunities for the number of people that want to get in. But it's not dissimilar than working in sports. Right. Everyone wants to work in sports. It's fun. It's sexy. Mm-hmm. And so you got to find a way in. And that to me was always I knew I wanted to work in sports, and I knew I was going to figure that out. And I was going to get there initially, and I did. Mm-hmm. And so then when I was working in venture capital, it never dawned on me that that's also a hard career space to get into. Right. It's something that I wanted to go pursue, is how I looked at it. And so we get asked that question, like, how do you get into venture, and what's made you successful? And I think a little bit people are looking for that like silver bullet or that pixie dust of like something I'm going to tell you is going to be like, oh, wow, I didn't think about that. Right. And what I always say is, you said it though. Work harder than others, work smarter than others, and build your network, and rinse and repeat, and be determined. And when you say that, people are like, but at the end of the day, there's no secret sauce. Right? You've got to have the work ethic. You've got to be willing, again, to do the work that others don't want to do, don't know how to do, aren't willing to do. And then someone told me, like, the best marketing, right, is find the problem, solve the problem, and spread the love. Tell everyone about it. And when you think about startups, that's what it is. Startups it's a blank slate, right?
Yep.
And there's a problem that's solved. The founders are annoyed about fill in the blank, right? Not being able to move money smarter, faster, betting on your phone, and it's clunky and hard to manage and navigate. And how come they don't know I like the Sixers, right? How come they don't think tonight, well, Harper's hurt, but like Harper's going to go out and I want to bet that he's going to have a home run.
Right.
They should know that. They should know I'm a Philly fan through and through. Like, why is sports betting not more like Amazon? Where they know your habits, they know your behaviors, right?
The algorithms.
And so at the end of the day, you got to find that problem. The best companies solve that problem. And then the big piece, you better tell everyone about it. You better market it. And I think of that from like the individual perspective. Like when you come into an opportunity, whether it's a small company, big company, they're not giving you the keys to the Ferrari.
It's true.
There's always a trust and you always have to prove yourself, right? And so at the end of the day, you got to look up and navigate and figure out what is annoying others. What is that like pain point that they have to do, but they don't necessarily want to do, but someone's got to do it.
Right.
And if you're that person that solves that problem, right? You found the problem, you solved it. You don't even have to tell others because they're going to tell. They're going to, wow, Daryl is that guy that came in, solved this for me, and he's been successful. I know he's someone we want to keep here.
Right.
And maybe that's a little bit of the secret sauce. But that's hustle. That's understanding what's going on, being observant. And I always say this, EQ is way more valuable than IQ. Hopefully it's both. Like you want really smart people.
Of course.
But it's that emotional talent that will ultimately carry you further. Especially more and more, you can find something out online. You can Google it. You can look it up. Your phone is so powerful that it's not just about who has the book smarts, but who knows what to do with it and who asks the right questions.
Right.
Like I know we're here and I'm just talking and talking and talking, but a lot of it, I usually aren't the person that gets to talk. I'm usually the person like behind the scenes a little.
Right. And making things happen.
But asking the questions and thinking it through thoroughly. And there's something to that. No doubt.
Right. I love it. Love it. What's the 3 to 5 year plan with 76 Capital right now? I mean, are you guys thinking about doing the fifth fund? What does that look like?
I'd say like, yes. Like we're at such an incredible inflection point. And what we saw 5 years ago, a lot of it's playing out in real time.
Okay.
And others are just starting to come around to how valuable sports and gaming and esports. So a third of the world identifies themselves as gamers.
Okay.
So think about
how
how many billions of people are gamers.
Right. And they're no longer saying they want to be a doctor, lawyer, or whatever the traditional occupations were back then. They're like, I want to be a YouTuber or I want to be a gamer. These are my kids saying this right now, So, I mean, I agree with you.
It's crazy. And you look up, right? So a third of the world identifies themselves as gamers. And the gaming industry is worth over $200 billion. And that number, right, is larger than movies and music combined.
Okay.
So we all know how powerful the music industry is and the film industry. Combined, gaming is larger today, and it's only going this way.
Wow.
And so what we saw years ago, people are really like, wow, right? And Microsoft goes out and acquires Activision Blizzard, $70 billion. $70 billion. It's staggering what's going on, but Wall Street's coming around to it, right? These team values are insane, right? The Cowboys are now, teams that used to be like, no one's worth over $5 billion.
Right.
And now Cowboys continue to be with top 5 most valuable, but they go out and they're worth over $7 billion.
That's Jim, what's his name? Jerry Jones.
Jerry Jones.
Yeah.
Jerry's world.
Wow. And
all of this is happening. It's happening so quickly. And there's such opportunity if you're an entrepreneur, if you're an innovator, to come in and disrupt, to come in and change this space that's moving very quickly. And so for us at 76, we definitely hit a chord. And for us, it's how fast can we move and how strategic. And so a couple things. In 2016, we became partners in a sports marketing agency called Rubicon Talent. And they don't do the contract work now. Who knows? But they do all the branding and marketing and all the deals. they represent some of the biggest NFL players, Olympians, and actually broadcasters and chefs.
Okay.
And so that was really fortunate and strategic for us, and that's been powerful on that side of things. But also, when the pandemic hit, a lot of our peers in the industry, we were like all talking to each other. Right. People are freaking out and not knowing if it was going to be 2 weeks or 2 months or 2 years.
Yep.
And a couple of our good friends said, you know what? Forget this. I'm going to go on an island literally, or I'm going to go away and I'm going to get really good Wi-Fi. Mm-hmm. And I'm going to come out of my island whenever this is over. And I'm going to be safe, and they're financially able to do it. And we're like, okay. Well, we went back and talked as a group and said, first and foremost, we're going to do everything we possibly can to make sure our companies and our entrepreneurs are in the best possible shape, financially, mentally. I mean, it was crazy.
Yeah, it
right?
was.
And unfortunately, really, I think we're going to see ramifications of that for years.
Of course.
And it was a really tough time. But what we did, we said, we've been talking about starting an advisory group, like a consultancy around these areas we're investing in, because it was cutting edge. It was next. No one was really talking about sports betting, gaming. Right. And so we rolled up our sleeves and we started working around the clock. And in addition to everything we were doing on the venture side, we started a consulting practice too, called 76 Capital Sports Advisory.
Nice.
Where we're consulting around these areas. And so we started that in April, and by August of 2020, we stood it up enough to bring in a president.
Wow.
And so we launched that during the pandemic. And fast forward 2 years, 35 clients later, we work with professional teams, leagues, Fortune 500 companies. We'll do over 7 figures top line this year. And so I don't know exactly what 76 will be in 5 years.
That's a very
but we have a a game plan and a blueprint, and we want to be, when you think of sports and business, that our name is there.
Nice.
And there's a lot that can and should be done, and we got a lot up our sleeves. I'm not wearing that. It's too hot outside to be wearing sleeves.
Tell me about it. Chad, let me tell you something, man. Like your entire story from the beginning, just working in the fields in Lancaster, and then learning the values there, and then coming to, the Northeast, or even prior to that, going to Walt Disney Corporation, working with them, and then coming up to the Northeast, and then eventually coming here and actually closing deals and raising money and starting advisor. You are the epitome of what, if someone put in the hard work and effort and actually had vision and didn't mind rolling up their sleeves, they would become someone like you, someone who is successful in this world, and someone who's a partner. I mean, you're a partner at 76 Capital now, and it just goes to show you that anything is possible if you put your mind to it. And I appreciate everything that you did here today, as far as giving those gems, because you dropped a lot of jewels today.
Nah, I appreciate that. Mm-hmm. And I don't think of it like that. Like, I truly appreciate everything, and I get like shy when I hear that.
Right.
And it's like a pinch me. Mm-hmm. Because again, I just go back to put in the work, be willing to put yourself out there.
Yep.
I strategically take chances constantly. Right? Like, I don't just jump off a cliff, but I think through and then I jump.
Gotcha.
And I rinse and repeat that. And I look at it where there's so much more to go do.
Of course.
And I try not to just look back, right? So Pat Croce, who I think's I love his book.
Yeah,
I love
awesome.
it. He's one of the greatest figures of all time in Philadelphia, in sports and business and life. Mm-hmm. And in his book, he always talks about, right, your rear view mirror is this big.
It's true.
But your dashboard is this big.
True.
And so you're always focused forward and just having a little bit on the past, right? Because you learn so much from history in the past, so don't get me wrong.
Right.
But you can't live in the past.
That's true.
You got to live in today and tomorrow. And so I appreciate everything you say. I've gotten very lucky. I've been fortunate to be around incredible people and learn from them and work from them, and amazing mentors. And that really, to me, is what's made me fortunate.
That's awesome, man. Chad, man, I appreciate you. How can people connect with you if they've ever wanted to ask you a question or what have you?
Well, first and foremost, my email. It's chad@SeventySixCapital.com. Spelled out.
Okay.
Right? Email.
Perfect.
And then I'm on LinkedIn, and then some of my social is at Chad Stender. Okay. Instagram, Twitter are my main. I appreciate you having me. It's so good getting to hang out, catch
reconnect
up. I mean,
again,
reconnect,
man.
Appreciate it.
I remember telling you maybe over a year ago, I was starting a podcast. Finally got you on board. So, and, I just want to thank you so much for giving me that opportunity to just capture your story, in this episode. So I appreciate you, man. We got planes to catch, you guys. We ain't got time for the nonsense.